Hello guys, this is Vineet and today is the 9th of August 2024 and this video is going to be our most important video yet since we went live on our Discord server about a week, 10 days ago. The reason for that why this is so important, and the most important video is because we are going to share our strategy with you guys. Exactly what are the rules that we follow before we actually enter in a trade, and how we identify a trade in any chart. It doesn't matter the if it's a 4-hour chart, 1-day chart, 2-day, 1-week chart, or even a 5-minute chart, because for our signals that we send out on all of our main trading accounts, our marketing accounts, we use 5-minute chart for our daily trading, where our target is to brag. It's about 20-30 pips for any particular given trade. The chart that you're looking at right now is a 4-hour chart, because I want to demonstrate our strategy, which is, on a chart which is a bit more less cluttered and a bit more clear, because it's more important for you guys to learn the rules and the conditions when you want to enter in a trade, and not necessarily the time frame of the chart. Chart could be any time frame. All that matters with the different time frames is what is your profit target, what is your order size, and where how aggressively you want to trade your account. That's the only difference in the chart that is like a higher time frame chart, like a daily chart or a weekly chart, where you open up a trade and you want to let that trade run to capture 2, 3, 4, 500 pips. But on the lower time frame charts, we are after more of a scalping trade or intraday trade, where our goal is to capture, say, 20, 30, 40 pips a trade. So you're looking at a 4-hour chart right now. It's a US dollar, Canadian dollar chart. And I'm going to show you guys exactly, these are the rules that you can replicate. Okay, these are not rules that are arbitrary. These are not subjective rules. These are in concrete. These are very specific black and white rules that you can follow to enhance your trading and to identify and execute trades and make loads and loads and loads of pips and money along with it. So let's not waste any time. Let's get right into it. You'll see that the chart is very clean. There is no lines, there is no clutter on the chart whatsoever. We're going to draw some lines only for demonstration purposes, to make things easier for you. All right, guys. But right now, you know me. I love RXI. It is, in my opinion, the absolute best indicator out there. There is one indicator it was given a choice. Hey, you can only use one indicator for your trading, and if I have to choose one, that would be RSI and no other indicator. And that's how strong it is in predicting the upcoming move or the reversal in the price. So without any further delay, so you're looking at a chart. So for our rule number one. So while we are doing this, let's also write down the rules as we go along. So our rule number one is identify a strong trend. Okay, so right now price is in a very strong uptrend. You can see it actually breached 70, and then let's draw a trend line just for ease, our own ease here. Okay, so we know that it's a very strong uptrend, higher highs, higher lows, and it looks like it's in a very, very strong uptrend. Now, how do we identify a trade? So our rule number one is identify a strong trend, okay, which we have already done. All right, and then our rule number two is identify a divergence. Okay. Now, what is divergence? Divergence is where you have a momentum indicator, which we have here in the RSI, starts to move in the opposite direction as the price itself. So that is exactly what's happened here. So let me remove this line for now, and let's identify the top of the RSI. Okay, I'm going to get a vertical line, and I'm going to identify where the RSI topped. Okay, here we go. So this is where my RSI topped. Now let's draw a horizontal line for the price top. Okay, here we go. So that's my horizontal line for the price stop, and let's draw a vertical line for my price stop. And you'll see in a minute why I'm doing that. And I'm doing that just for illustration purposes. You guys, once you get used to this strategy, you won't need to do any of this. So this is just to make sure you guys understand exactly what I'm trying to point out and exactly what I'm trying to get at. Okay, guys, so now I want to draw a trend line from the top of RSI to the top of price. Here we go. All right, guys. So that's my line joining the top of the price, top of the RSI to the top of the price. So clearly, price is going higher, but the RSI is going lower. So let me draw another trend line from the top of the RSI to the top of the price, but on RSI. So you can see clearly, price is going higher, RSI is going lower. That is called divergence. So now we have spotted the divergence. Hey, what happened to my notes? Okay, that's fine. We have spotted the divergence. Now what we want to do is, our rule number 3 is we want a confirmation of the price reversal. So divergence is saying that, hey, price is about to reverse. So you want to enter in the trade when the price reverses. And then as soon as we have that confirmation of the price reversal, we want to get into that trade. All right, guys. So now the price has already started to reverse, but the confirmation is not there. What is my confirmation? Here, you'll see. My confirmation is the trend line break. Here's my trend line. That's my confirmation. So my confirmation is it broke the trend line, went up again, tested it, and that's my confirmation. So now all 3 of my rules. Number 1, a price going high in a trend that is overextended. Now rule number 2 is divergence. So RSI is moving in the opposite direction than the price. And rule number 3 is it breaks the actual trend line. So that confirms the price reversal, and I want to enter in my trade. I want to enter in this particular condition. I want to enter in a sell trade of, say, approximately 2 to 1 risk to reward ratio. So let's do this. Make this around here, and then make it exactly 2 to 1 risk to reward ratio, and then we let this trade run and see how it actually plays out. Here we go. So you see what happened here. So it played out exactly how we expected it to play out, and that is it, guys. So that's the all of it when it comes to our strategy, where you identify an uptrend. It could be a downtrend. How do we do that? When a trend has gone above 70 or below 30 for the downtrend. And then in this particular case, the RSI has started to move lower. Okay, that's our divergence. That's our step number 2. And if it was the opposite direction, then the RSI would be going up instead of going down. If the trend was downward trend and then it's reversed, and RSI is saying, hey, it's reversing, that means it is going up. So if you look here, for example, now we don't have to go too much further back. So here, price is going lower and RSI is going higher. So what does that tell me? That tells me that so let me clear everything out here. Okay, remove drawing. Okay, so let's redraw just this. So price is going lower, it's making lower lows. Lower high, lower lows, lower high, lower lows. But my RSI is making higher highs and higher lows. So RSI has already taken a divergence, taken a move for the uptrend. Now all I have to do is get into a trade when it breaks the trend line here. And this is when you take a buy trade and you ride it up. So I hope this is making sense. It's so simple that you start looking at trading totally differently. These rules are so simple that anybody with a bit of a practice, a week, 2 week, 3 weeks worth of practice on a demo account can really, really do wonders with their trading. And I don't think it's that complicated. And if you still want more clarification on this particular strategy, is I'll be more than happy to share, go deeper into it, or give you more examples. So shoot me a message or reply to this video, and I'll be more than happy to uh, address any concerns that you may have or any questions that you may have. It's as simple as, guys, identify a trend, identify a divergence, trend reversal confirmation by trend line break, you enter in the trade. And you enter in a 2-to-1 risk reward ratio. So if you are even winning 50% of the trades, you're still way, way, way ahead of the game. So the higher the time frame, higher is your risk reward ratio. Keep that in mind, guys, because these are very, very high probability trades. On higher time frames, these trades can give you a lot of pips and a lot of money in return. So I think that's it, guys. So make sure to participate in any conversation or any discussion around this, and I'll be more than happy to clarify or answer any questions. All right, I'll talk to you soon, guys.